for air conditioners and LED makers may be relaxed, and that investments made after the 1st of April this year will be eligible for benefits under the scheme. To discuss this, we have two guests with us, Atul, the MD of Dixon Technologies, and Vikas Gupta, the MD of PG Electro Plus, who join in now. Gentlemen, morning to both of you. Mr. Gupta, let me start with you. Actually, Mr. Lal, let me go to you first because, we've had this discussion on PLI several times in the past. Now we understand that the scheme may be relaxed for air conditioners and for LED makers. What would this mean? And, where are we in terms of any kind of progress that has been made on investments, on capex? And what are you looking at as a company?
So, I think it's a very prudent step by the government. They've allowed the capex made after 1st of April to be considered under the scheme because the scheme has just been announced. The stakeholders have filed their applications only by 15th of September. So undoubtedly, it's a very positive step and it's going to help the industry in taking the maximum advantage of this particular scheme. In Dixon's case, as far as the AC space is concerned, we are in the space of AC control boards. So we're getting into a JV with our Japanese partner, Dixon, and we have committed a capex of 50 crores. This is primarily for AC control boards. We hope that we are successful and selected as one of the PLI participants. In the LED lighting, we have a large play, a very large play. And again, very prudently, the government's initiative is primarily to create the component ecosystem. So we have filed an application. We're committing a capex of 100 crores in the LED component space, which would be primarily in the mechanical side and also in the LED lighting management systems and driver systems, apart from some other small components. Okay. So we're looking forward. We already have various PLI. We are beneficiaries in a couple of schemes already. We are there in mobiles, we are there in IT hardware. As per our understanding, we have also been approved for the telecom. So this is another one which we are looking forward to.
So just one follow-up here. You did say that if you are selected as one of the PLI participants, then this would mean, better opportunities for you. Last time when we spoke, you said that you're doing business of around 150 crores with Rexim currently, and you're expecting about 300 crores revenues going forward. If you are selected in terms of one of the PLI participants, then what would this mean in terms of, growth for you, revenue potential, and when would it sort of start to show up in your books?
So one of the main objectives and the business plan in this particular JV is that the deeply embedded supply chain, which Rexim presently has in the border countries, is going to be shifted to India. So this particular footprint would be servicing not only the domestic Indian market, it would also be servicing the global markets. So we are fairly confident that in around 2 years, we should be touching a revenue of 500 crores, out of which a significant part would be from the global markets.
Just a quick follow-up in terms of a numerical value, Mr. Lal. As you mentioned, you qualify for various schemes. The mobile is a separate one. There's LED. So out of the total capex outlay that you have as of now, what would that number be? And what percentage of that perhaps could fall within the PLI ambit and therefore get some incentives and benefits?
So the number crunching is already on because we are pursuing various expansions in our businesses. As far as PLI is concerned, we are beneficiary in mobile scheme. So in this particular year, we're going to be crossing the second threshold of 100 crores. So I think by the end of the year, we'll be somewhere around 130, 140 crores, which is much above the threshold requirement of the government of India. We have already made investments in our IT products, which is a small investment of 4 crores. Further, a part of the investment, once the telecom PLI, the official results are announced, comes in, we commit because that's in a JV with Bharti Group. And let's see what happens with the lighting one. And lighting one, I think the time period available with us is going to be slightly longer. So to put the figure together, I think in the case of PLI-led schemes, it will be somewhere in the range of around 220 to 250 crores.
Okay, so that's the kind of capex that's going to enjoy the PLI benefits, perhaps looking at the present regulation and the numbers. Thank you for that clarification. Let's bring in Mr. Vikas Gupta of PG Electroplast into the conversation as well. Mr. Gupta, how have you read the schemes? I mean, you also are a supplier to a lot of the major manufacturers. From your business standpoint, are you qualifying given the current thresholds?
Yeah, good morning to all. We have studied this scheme well, and as per our understanding, we meet all the pre-qualification criteria. In fact, we have already started a rollout of our first capex plan, and in fact, we have already submitted our application under AC PLI scheme, and we are committed a capex of 300 crore rupees over a period of 4 to 5 years. Out of that, almost around capex of around 120 crores will be happening in the current FY22 only. We are setting up a greenfield facility in district of Ahmednagar near Pune city, where we'll be having an integrated manufacturing facility for air conditioners.
Okay, so you said that a 300 crore capex is what you're putting up for the next 4 to 5 years. Mr. Gupta, what would this mean in terms of a revenue potential for the company?
So we are targeting up, like as per the guidelines of the PLI scheme, also we have to hit a incremental sales of 1,500 crore rupees by the fifth year of this scheme. So we are targeting that kind of revenue. We are already doing around 200 to 300 crores of revenue from AC business. So we are targeting to grow it in multiple times in coming 3 to 4 years.
Will the supply issues come in the way of your targets? Because this whole semiconductor shortage, the chip shortage issue is something that is worrying the industry quite a bit. How will it affect your own production targets?
So overall supply chain disruptions has been a kind of a headache for all the industry players. We are trying to work with our vendors in overseas markets and try to tie up our supplies for the coming period. So that's a challenge. I think the whole of industry is trying to figure out the way, but we are also working with our vendors to minimize the disruptions of supply chain for ourselves.
Okay. Mr. Lal, to get back to sort of overall business trends and what you're observing, I mean, give us a sense on ground. The market is in an extremely buoyant note, but is the demand from OEMs equally strong? I know, I mean, semiconductors is an issue. Your take on that and the sense on overall demand?
So in our particular sector, festive period is an extremely important element. And we are primary suppliers to the principals, to the brand owners. So undoubtedly, our order book is overflowing across all the verticals, whether it's televisions or mobile phones or washing machines or lighting. However, I'm keeping my fingers crossed that during the festive period, the secondary sales to the final customer is equally buoyant. So I'm sanguine about it. But undoubtedly, as of now, it's very, very positive.
Okay. And what about the delivery? I mean, demand is very strong, Mr. Lal, but are you able to deliver across, or is this chip issue impacting the pace of execution for you? Also on mobiles, I mean, chips are required almost everywhere, all sorts of electronics, right?
So undoubtedly, supply chain is extremely challenging. It's the shortage of the components. It's also the challenges on the shipping side, on the transit period side. So, but I think our teams, along with our partners globally, are addressing the issues. So there is some impact, but well, we are trying to overcome it.
All right, gentlemen, thanks a lot for that. All the best for the PLI scheme and, of course, the way forward for the companies as well. Those are very optimistic views coming in from both Dixon Tech and PG Electroplast, but looks like the market is not willing to give up any of its gains. By the way, real estate is literally on fire today. Just look at Oberoi Realty, 10% higher right now. That stock, huge volumes as well being traded on many of these names. Indiabulls Real Estate up almost about 4% odd. Indiabulls Housing Finance, some repayments have been done there, so 3% higher on that stock. And some of the usual favorites, telecom names like Bharti Airtel continue to do well. So not letting up, Anuj.
Absolutely. And the stock that we spotted first thing in the morning, Tata Chemicals, just look at that stock, 6% higher now on that one. In fact, it's now almost the top F&O gainer. That number one is still L&T Infotech, but Tata Chem close second now, 6% higher. So that's the point I was making. Every morning the market's giving you an indication of 2 or 3 stocks which perhaps would have a trend day, and if you identify them early, you make a lot of money. Mitesh Thakkar back with us, Prakash Kaba also joining us. Mitesh, your thoughts on the first hour, and what would be your stock calls now?
So Anuj, the first hour has been extremely good. I talked about taking some profits close to 17,950. So we've seen mild taper up from there. I think we are stretched overbought, but the trend is on the upside. So if you've taken 1/4 of your position off, just trail your stop loss to 17,870 and hold. And on the stock side, I have a buy on Grasim with a stop at 1620 for targets of 1680, and JSW Steel is a sell call with a stop at 676 for targets of 640.
Okay, Mitesh, wanted to ask you about, the two pockets that continue to move with so much strength, right? There is, of course, real estate on one hand, with stocks like Oberoi Realty hitting fresh highs. And then there's IT, the usual favorites of the market. From here on, within these two spaces, what would your top picks be?
See, I think, reality is a very different animal in the sense that it's like after underperforming for many months, last few weeks, we've seen a big catch-up happening over there. In fact, yesterday I think I discussed Nifty Realty with Anuj and gave some targets which are about 18-20% higher from current levels. So in that sense, I'm quite positive over there. IT, on the other hand, is a mature rally. I think it's done a bit. So from if I was to trade IT, I would trade with a trading perspective, take a few days of breakout, enjoy the momentum and take profits. But reality, I think, is something which has started the trend. So you could see the stocks doing very well over here for next few months.
Mitesh, thanks a lot for those trading ideas. Just keep an eye on Oracle Financial Services. Among all the IT stocks, this is the one stock which perhaps has not participated as much in the rally, and today it looks like could be that kind of a day. But it's an IT day, and that one is beginning to make a move up only about 2.5%. But just could be an interesting day to play catch up on this one. Prakash Kaba is also joining us. Prakash, good morning to you. What are your trades?
I feel the Nifty is strong, so far good. I like two stocks here, Anuj. First is Asian Paints. Very good chance it's climbing to levels beyond 3,400. Stop below 3,320. The way it's trading is going to maybe around 3,590 odd. The second stock that I like is Grasim. I think it's going to 1675 to 1700. It's a matter of time. Stop below 1620 on Grasim should be fine. The momentum is very strong in both these stocks.
Okay, momentum is very strong. Yes, Prakash, thanks a lot for joining us. Momentum is indeed very strong in all these names. Momentum is very strong in commodity markets as well. So let's go across to Manisha Gupta. Manisha, good morning. So what's the commodity that you're tracking?
I'm looking at overall metal sector, Anuj, because overnight we've seen strong gains coming in for this one. You really have to look on where we started this week because of the Evergrande issue. And since then, the kind of recovery that most of the metal prices have seen, we almost seem to be ending in the positive for many of those metal prices. Well, yes, there is some slight profit taking in the Asian markets, especially for metals like aluminum and nickel. But overall, the debt troubles at Evergrande seem to be soothing out, and the dollar index is off its 1-month highs, and that clearly has been supportive for this space. I want to quickly take one fundamental for each of these metals to explain on why the markets really are buying all the dips that you are seeing into this one. Starting with copper itself, and we are looking at lower production there. The inventories have continued to decline, and China production for copper also has continued to decline, and that clearly has been supportive. There are supply concerns and lower China output, which has led to the prices on the higher side. The aluminum output also has declined by more than 3% in the month of August for China. That clearly seems to be supporting the prices there. And then we have seen gains come in for the other metal prices also. Nickel, for example, is 10% of the overall China property demand. And we have seen nickel inventories at record lows in Shanghai. And the nickel inventories have declined by nearly 30% since the month of March for LME as well, clearly supporting prices there. Copper, as we were discussing, well, we have seen prices there as well continue to gain up. It has been trading in a range right now, but the latest report suggests that copper could be in deficit of 150,000 tons for the year 2021, and the demand from the downstream companies has continued stronger, and that has been supportive for that one. In the other metals, we also have seen gains come in for zinc and tin kind of metals. Zinc, for example, has been gaining because of the power crisis in EU, which seems to be affecting production. There is a smelter called Nyrstar in Holland, where there has been an output cut because of the electricity shortages and higher electricity costs. That has been supportive for zinc. And tin has been constantly hitting record highs from the month of July. We have seen constant decline in inventories here, and the strong demand from the lead acid batteries and soldering have supported tin, which is up by nearly 77% now for this current year. That is the report card for this week itself, with the best of gains coming in for tin and aluminum. Steel prices have rebounded quite sharply as well. And even as we started this week quite low for copper and nickel, these couple of metals also seem to be turning into positive on your screens.
All right, Manisha, thanks a lot for that. Well, let's do one thing. Let's take a quick commercial break on that note. But when we come back, Ramesh Gehani of Endurance Technologies will join in to discuss the auto PLI scheme that got the government notification today. More on the impact coming up in just a bit.
Co-powered by